Welcome to EWF Bootcamp day number 14, Elliott Wave Sequence. This is the last video in the 14 days bootcamp series, and in today's video we will explain the idea of 3, 7, and 11 swing, or the Elliott Wave Sequence. And we are going to also show you an example on how to use them to trade. So let's take a look here at 3 swing structure. Today's market runs in a corrective sequence, or in other words 3 waves, more than in impulsive 5 waves. So therefore it is important to look at the market from that perspective when we try to label or when we try to trade. So corrective sequence is running in 3, 7, or 11 swing. So a simple 3 swing would be something like this. Can be labeled either as an ABC or a WXY. That really depends on the subdivision, on the internal. If it is 5, 3, 5, then it will be ABC. If it is 3, 3, 3, it will be labeled as WXY. So it all depends on the subdivision. But the labeling here does not really matter that much. It is more important to see the sequence as well as the target. So in a 3 swing move, whether it is WXY or ABC, the Fibonacci relationship is very simple. The wave C or the wave Y, which is the third swing, is always between 100% and 123.6% of the first swing, or wave W or wave A. Alright, so this leg here is always between 100% and 123.6%. This area, usually we highlight it in blue color in our chart, is called the equal leg area. Okay, so in the picture above, very simple, with Y, which is the third swing, is ending between 100% and 123.6% of the first swing, or with W. Now next we're going to take a look at the 7 swing structure. This is a WXY structure. Okay, it is the next corrective sequence after 3 swing. So after 3 swing we have 7 swing. A 7 swing is labeled as a WXY, but it is a WXY of a larger degree. So this is the 7 swing move. This is what it looks like. 1, 2, 3. So we can see we have 3 swings wherein the third swing is equal to the first swing. And then we got a pullback. The pullback fails. Okay, and then we got another 3 swings up, which is also the same idea. This is equal to this. And not only that, so we got overall 1, 2, 3, 4, 5, 6, 7. So all this leg is equal, ideally, or within the equal leg area. And on top of that, this is also equal. In other words, this swing here is also equal to this swing. So that is really the key to understand a WXY 7 swing move. This is nothing more than a 3 swing move, but you subdivide each leg into another 3 waves. So when you subdivide, so if you only focus on the blue color here, this is nothing more than a 1, 2, 3. And then you divide the leg here into 3 waves. You divide this leg into another 3 waves, and you will get 1, 2, 3, 4, 5, 6, 7. Alright, so that is a very simple 7 swing structure, and also very common in the market, and therefore very important for you to understand this idea. And this is really the structure that we trade all the time, okay, in the live trading room, the 7 swing structure. So here in the 7 swing move, the Y in the bracket, the Y in blue, is also between 100 to 123.6% of the W in blue. So in other words, swing number 7, which is this here, right? Swing number 7 is 100% to 123.6% of swing number 3. So in other words, W equal to the Y in blue. Now right here is an 11 swing structure, also called a WXYZ. So this is the next corrective sequence after 7 swing. So we have 3 swing, and then after that 7 swing, and then after 7 swing we have 11 swing. So an 11 swing sequence is the next corrective sequence after 7 swing. It is also labeled as WXYZ. Very, very simple. So all you do is adding 3 more waves up. So you have 1, 2, 3, and then 5, 6, 7. So this is WXY. Earlier we looked at it earlier, 7 swing, and then we add just 3 waves up more. It becomes 11 swing. So we label this as a WX YXZ in the blue degree. Okay, look at the blue degree color here. So this is a simple WXYZ into this market. Okay, in reality, WXYZ can be a combination of any corrective sequence. Okay, but that will become complicated. So in other words, this leg here can become anything, can become a flat, can become a zigzag, and so on. Same thing here, can even become a triangle. But for simplicity purpose, in this example, we will use each leg is another double 3. Okay, which is a WXY. This is also called a double 3 structure. Alright, so in an 11 swing move, the width Z, which is this leg here, is between 100 and 123.6% of the width W in blue. So how do we use this in trading? We use this in trading with the idea of buying or selling in 3, 7, or 11 swing. So the objective is to identify a trend in the higher degree time frame. Okay, whether the trend in the higher degree is bullish or bearish. So once we identify that, then we go to the lower time frame and we buy or sell the pullback in 3, 7, or 11 swing. Below is an example of buying in 7 swing. You can see this is an SPX chart, for example. We can see, let's say we identify SPX is bullish in the higher degree. So what we do in this particular case is, okay, we see this leg 1, 2, and then 3, right? So we are trying to buy again 3 swing equal leg at the 100% area, 100% level, buying here for the next leg higher. That's what we usually do in the live trading room as well. We always buy, we identify the trend first in the higher degree. So once we identify that, we go to the lower time frame and then buy or sell the pullback in the sequence of 3, 7, 11 swing. The stop is always below the 1.618 extension. Now for more information exactly how you do it day by day, then join the live trading room, because in the live trading room we always cover whatever pair is tradable on that particular day using this idea of 3, 7, 11 swing, also identifying the trend. So here's an example, a real example of using the 3, 7, 11 swing. So first I identify the trend in the higher degree time frame. We want to identify it by looking at the 4-hour chart. We can see that we are looking for more upside. And why are we looking for more upside? Because you can see from this low, okay, this sequence is 1, 2, 3, 4, 5 swing and has not reached the equal leg at 174.70. So we like to have more upside in the pair, and what we do then is trying to buy 3, 7, 11 swing. So for example, this dips here can be bought before. If we go down to the lower time frame, we can see this dips here. You can see very clear 1, 2, 3, right? 3 swings equal leg. You can buy it here, alright, and then after you buy it here, you can see how the pair has already started the next leg higher again. So this is just an example identifying the trend in the higher degree, which is still looking higher because the sequence is incomplete to the equal leg, and then buying in the lower time frame in the sequence of 3, 7, 11 swing. Okay, so finally, we hope that the EWF 14 days bootcamp has helped you to get familiar with our services and also enable you to understand how we trade and how to best use our services. Now, if you have any further question, feel free to get in touch with us. Email us support@elliottwave-forecast.com when we would be happy to assist you further. After your 14 days trial is over, you will be automatically subscribed to the Premium Plus plan. Okay, so you don't need to do anything for that. But if you want other plans, please let us know via live chat on the main site. And we recommend you to subscribe at least a platinum plan, because it includes the live trading room, which can give you trading guidance with the trading journal, entry, stop, and limit. And then lastly, the Platinum Plus plan, which is our best plan, includes everything we offer in the Platinum plan. And then on top of that, there is also additional 26 more instrument, okay, that is being covered. Also strategy of the day and strategy of the week. And this will conclude this session as well as the 14 days Bootcamp. Thank you very much for joining me in this 14-day series, and I wish you all good luck in your trading.